based on the reported profit, based on the reported profit of the company. In other terms, the tax which a company pays to the government is always based on the profit. Is always based on the profit which is reported by the company, based on the profit reported by the company. Equally, in financial reporting and analysis, you covered, or you are told that there are two types of income taxes, two types of income taxes, or yes, two types of income taxes. One, we have the current tax, and then number two, we have something called the deferred tax. So these are the two types of taxes, the two types of income taxes, which you covered in financial reporting and analysis. First of all, the current tax, this one we say is the actual tax payable, in a certain financial year. So that actual amount of tax which a company should pay to the government, we refer to it as what? We refer to it as the current tax. How do we compute this particular current tax? Now, the current tax, this one is computed by taking the taxable profit, times the tax rate, and automatically from also what you have covered in taxation in PFT, you know how to compute the taxable profit. How do we compute the taxable profit? We take the taxable incomes of the company minus the allowable or the deductible expenses. Whatever you get is the taxable profit. We take that taxable profit, we basically multiply that with the tax rate. Now that will give us the actual amount of tax which a company should pay to the government. So therefore, in this case, we have said that the current tax, this refers now to that actual amount of tax to be paid by a company to the government in a certain financial year. This one is computed by taking the current tax, by taking the taxable profit times the taxable profit times what? The tax rate. Now, at this level, that is not our interest. Our interest at this level is basically how to account, and also how to compute and also to account for the deferred what? Taxes. But you'll be able to see that most of the questions which we will come across at this level, they have the aspect of group accounts. For example, issues to do with _engaged profit, of which all these are aspects, or these are concepts which you covered in the topic of what? Of group account. Whatever you can't be able to remember, basically will be able to remind you so that you can be able to understand how we handle those particular questions. So therefore, our main interest at this level is basically not the aspect of the current tax, but our main level here is the aspect of what? Of the deferred tax. So maybe we can start by defining what is a deferred tax. We can start by defining the deferred tax. And basically a deferred tax, from the name suggests here, to defer. Basically to defer is to postpone something and maybe do it in the future. So therefore, a deferred tax is a tax which the company was supposed to pay during the current year, but that tax has been postponed. It will be paid in the future. Or it's the tax the company was supposed to recover during the current financial year, but that tax has been deferred. It will be refunded to the company in the future. It will be refunded to the company then in the future. Because in this case, it is also important for you to recall that we have two types of deferred tax. One, we have a deferred tax liability, and then we also have the deferred tax what? Asset. Now, a deferred tax liability, this is the tax which is payable in the future. Tax payable. These are tax which is payable in what? In the future. A tax payable in the future. Tax payable in the future referred to it as what? The deferred tax liability. On the other hand, when we talk about a deferred tax asset, this is a tax which is recoverable in the